Mr. Gopal Sarda of Kolte-Patil is here. Mr. Sarda, good afternoon. Thank you very much for your time. How did the quarter go for you? Did you start feeling the heat already? How are the overall sales and realizations? And moreover, how's the outlook from here on in this all glamour of bringing prices down? How are you faring?
So basically, if we talk about the quarter, for the quarter, we have done a pre-sales of 0.67 million square feet and we have collected 378 crores, which were highest collections from last 6-7 quarters. I think since this was the last quarter for the financial year 20, if we compare our year-on-year performance, this year we have done a pre-sales of 2.5 million square feet and we have done 1368 crores collection, which is highest ever collections in company's 3 decades of history. I think overall company's position remained very healthy and strong. The reason being we are very low on the debt front. If you see for the financial year 20, we have reduced the debt by 83 crores. So as of today, we have 434 crore as a net debt lying on the books. We have sold receivables of approximately 1350 crores. And as far as the overall portfolio is concerned, our majority of the portfolio is into affordable and mid-income segment, which we believe would be the first to revive post-COVID impact across world. And coming to your demand question, I think the demand was always stable as far as Pune, Bangalore market is concerned, and we have majority of our portfolio in Pune market. Post COVID-19, I think initially it seems that the demand were low. So April we were at 40% of our operational capacity. But in the month of May, we have come back to 50, and June also we have seen overall pre-sales coming to 60% of our normal run rate. So it looks like the demand is increasing and the consumer confidence is coming back. To generate the next level of sales in this pandemic environment, I think we have created a digital platform which is helping us to derive the desired sales. We step up so that the customer don't have to step out is what the formula which we are looking for our organization as a whole. I think going ahead, I believe that 3 ingredients are very, very important. I called it as a 3 M's: man, money and material. One who will be able to manage these 3 ingredients in a right mix would be able to survive and come up very fast and probably would be continuing to the growth journey for the companies.
Right. Mr. Sarda, are you reworking your numbers in the new reality, the way economy is taking a hit? I'm sure that Pune and Bangalore would also not be completely immune to what's happening in the real market, where wages are getting sliced, jobs are also at stake. So are you reworking your target numbers slightly lower? What's your visibility at this juncture?
So as of today, see, we have, as I said, we were well positioned compared to the peers. And if I have to summarize compared to industry versus KPDL positioning, I think overall industry focused more on the launch sales. So this year, whatever sales we have generated were purely from a sustenance sales. Second, liquidity is a big concern for the industry as a whole, while we have delivered the highest ever collections in 3 decades of history. And third, the debts are going up for the industry as a whole while we have reduced the debt. And coming back to the overall realignment of the business plan. So as far as the employee strength is there, we have complete intact employee base. We have not deducted any salaries for any of the employees. We are paying them consecutively on a month-on-month basis. And obviously, yes, looking at the overall change in scenario wherein labor is a big constraint, because today, before COVID, we were at 4,500 laborers across Pune sites, and currently it has come down to 1,400 to 1,500 laborers. So typically it looks like that 35-40% is the operational capabilities. So for the financial year, the focus would remain to preserve cash. Focus would remain to revive the operational capacity. So we would love to come back to the original operational capacity, and then probably December onwards, we'll again focus on the full-fledged 5-year growth journey which we have derived for the company. In this journey, if there are any business development proposals which are coming under asset-light model, maybe we call it JV, JDs or profit-sharing arrangements, we are evaluating and we are open to close those transactions. So I think, yes, from a operations perspective, since the labor is a constraint, automatically the overall operational capability looks like in the range of 50 to 60%, and it needs to revive quickly. And in this journey, without taking further debts, we are comfortably well positioned to manage the working capital cycles. The reason being, as on March 2020, we have cash and cash equivalents to the tune of 98 crore lying on the books. We have undrawn limits of 110 crores from the banks, and we have already given 145 crores of invoices by 15th of March, which is also flowing into the system. And as I said, in terms of the receivables, 1350 crores lying on the books. So it seems that we will be comfortably, we are in a comfortable position to manage the operations, and the entire organization focus would remain to bring back the operation to the original level, and then the growth journey will be continued.
Right. All right, Mr. Sarda, we'll let you go on that one. Thanks so much for your time and good luck for your coming quarters. That was Kolte-Patil